Light FM, Naked Eyes. Good morning and hello. I appreciate you being here today. We're at 842. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. You darn well should. Might not be a bad idea to do that this morning because it's time to check in on your money. Phillip Statler from Statler Financial Services is on the phone to look at what's going on Wall Street, and boy, things sure changed a couple of minutes ago, didn't they, Phillip?
They did. Talk about flush the toilet, Dave. It happened this morning. When the jobs number, unemployment rate came out, it was really some rather good news.
Absolutely. I was reading one of my tip sheets, and they were quoting a Bank of America analyst saying he read it as being that we were into the good news is bad news situation on the markets. And boy, oh boy, were we. We were expecting 165,000 new jobs to be created by the economy last month. The federal government released their numbers, and hoo-ha, created 256,000 new jobs, which is just resoundingly good news for people looking for a job. And the unemployment rate is down to 4.1%. We should say the Fed was shooting to have a 4% unemployment rate, so we're going back down to where the Fed wants it to be. That's just incredibly good news, and Wall Street's completely unimpressed, aren't they?
Well, yeah, because it determines that, the economy is hotter than what the Fed wants it to be right now for inflationary purposes. And so when that number hit, Dave, I saw the Dow Jones Industrial 30 go from being a negative 55 to a negative 250 and negative 386, like bam, bam, bam.
Yeah, but I've got delayed quotes, but one of my top line tip sheets were saying Dow falls 370 points almost the minute that the jobs report came out. And it's one of those classic bad news is good news. Yes, even the employers that are listed on the exchange are happy to see a healthy economy, but at the same time, they're looking for some clarity and some guidance and some predictability as to what we can do as far as interest rates, money supply, fiscal policy, which they basically haven't got any. And it's, this is exactly what we didn't need in terms of investment news this morning, was it?
It definitely wasn't, Dave. We could have gone without these numbers. We would have been, I think the market would have been better served had we come in at expectations. And the expectation was really for somewhere in the neighborhood of 155,000 employment jobs coming out, and instead of that, something that's just a crazy number that we still see employment strong.
Oh, yeah. When I was working in publicly traded stock companies, one of the things our chief operating officer always told us as managers we had to do was do what you say you're going to do. Don't do a lot more. Don't do a lot less, for heaven's sake. Do what you say you're going to do, and that makes investors happy. Well, that counts for the economy as well. If we'd gotten that 165,000 jobs, we would have said, well, okay, fine, we're compressing a little bit unemployment. That means we're going to go about where we're expecting to go, stay the 4.2% unemployment rate. Everything's doing okay. We're matching up openings and people looking for jobs, and Wall Street probably would have been relatively happy with that, but all of a sudden, we've got a booming economy as the administration changes on the 20th of the month, and investors all over the financial markets are going, oh, good Lord, what's this going to mean? Because we've got both sides of it now happening. Fiscal policy on the administrative and legislative branch of government, and monetary policy with the Fed basically already giving us the telegraph that if we'd gotten what we were planning this morning, they weren't planning a lot more interest rate cuts this year. I got a sneaking hunch the odds makers in Chicago are cutting 2 interest rate cuts this year back to 1 if we're lucky.
Yeah, I'm looking at interest rates as you speak, Dave, and not good. U.S. government 30-year Treasury 4.99%. Yeah, I keep hitting my little refresh to see if it goes to 5. But so far, we're just a tad below 5. The 10 years at 4.78. We continue to see, interest rates at extremely high numbers, which is what all your credit card stuff is going to be based on. All the mortgage rates are going to be based on these numbers. And so that's really not good news for that sector.
Absolutely not. I'm looking at the real-time chart right now on bond yields, and about the same time that the market tanked for the unemployment count, the bond rates started going up. I mean, there's an inverse relationship to them anyway. But right now, what we've got, a semi-hinky real estate market. The last thing in the world we need is, 7% plus mortgages. The federal government does not need an increase in interest expense with the kind of federal debt we're carrying. And you mentioned interest rates because they all trickle upward into our credit card interest rates if we carry a balance, and that's going to get more painful. I mean, yeah, good news really is bad news sometimes, isn't it?
It definitely is in this case for sure. We're seeing some drastic numbers. I was reading an article that showed I hadn't really paid attention, but the Russell 2000
Mm-hmm.
is on the brink of correction mode. It's within a couple dollars, like I think $10 or $15 of hitting correction mode. And with the numbers we're seeing today on the futures, we could very well hit that at the open.
That's right. The Russell really hasn't gotten the beneficiary of that little week or so rally that we had from the tanking that we took at the end of the year in 24, is it?
No, it hasn't. I mean, it hit a high. It's the 52-week high, or probably all-time high, back in November.
Yeah, and then everything went down by a little bit, and the big three the big three indexes have kind of recovered for the last week or so. But yeah, the Russell has been kind of the laggard in the bunch down the line which makes sense because they're more interest rate sensitive and they're more growth stocks, and so if you're conservative, you're going to go more with the blue chips.
Yeah, absolutely. So, hey, we got all the wildfires, tidbits, California. So that's affecting the insurance industry incredibly. All states trading down 4.8%. Travelers is trading down 4%, and Chubb trading down 4.5% this morning.
Ouch. Yeah, I read an article last night. They did some of the math based upon just the losses on property that they've seen so far, and they started a whole new fire this morning, so it's not over by any measure because nothing's under control. They're saying that the projected losses for the fire just so far could add $3,000 onto the price of the average California homeowner policy. That's an extreme version of what we go through here in Florida when a hurricane hits an area that's got a lot of property damage. They've got it in spades there in California right now.
Yeah, they do. This is, and somebody was talking this morning on the news that, unlike hurricanes, you don't have time to prepare. I mean, it can happen within seconds that all of a sudden there's a fire in your backyard attacking your house.
Oh, yeah, on a 165-mile-an-hour roof is perfectly fine. That'll mitigate your damage on a hurricane. But if it catches fire like it is out there, I mean, there's no way to prepare for that.
No, there's no mitigation in that deal.
Absolutely. Nobody's built a 100% fireproof house yet. Other things going on. I noticed Bitcoin is kind of coming off of its highs. It's falling out of favor, too. Where in the heck's the money going? They're selling bonds and bringing the yields up, selling stocks. Now Bitcoin is way down, I say, down past the 92,000 mark.
Well, it's bouncing back up this morning, though, Dave. It's at 93,280 right now. So it's been pretty volatile since it hit that high over 100. It's dropped down into the low 90s, back up to the high 90s. So it's been a pretty big fluctuation over this last month or so.
It's going to take a little while before it becomes as stable as gold and fulfills that prediction that you kind of poked fun at, and so have I, that Bitcoin is going to replace gold as being the stable resort currency, right?
Yeah, exactly.
Got to be some stability in it before we can use it as a reference. There are some reports coming out. Earnings season really hasn't started in earnest yet, but got a few household names. If you're flying lately, Delta, how did they do this past quarter?
Delta had a really good quarter. They surprised to the upside. They beat earnings by 10 cents a share, came in at $1.85. Revenue was slightly ahead of expectations for them. So that was good. They gave some strong guidance for the coming year. They're trading up 7.1% today, though I think today will be an ugly day for them in Atlanta because they're having some ice storms there.
No, it's not going to be fun for any of the transportation issues with the whole northern tier of states getting iced in and then California catching fire. I'm not sure I'd really want to be a CEO of an airline right now.
No, no, it won't be fun. Won't be fun. Hey, the other one we had come in was Walgreens. Now,
Mm-hmm.
Walgreens, man, they really had a good quarter, Dave. They made 51 cents a share versus 37 cents expected, and revenue, get this, beat by $2 billion. Came in at 39.4 billion. That was 2 billion more than expected. So good quarter
Wow.
for them. Yeah,
Did,
they're trading
did they
up.
have any? Did they have any details on that? Because if I remember correctly, the last couple of quarters, Walgreens has been really up on the ropes, haven't they?
It's one of those. I think CVS has been getting it harder than Walgreens has.
Mm-hmm.
But they're maintaining their fiscal 2025 earnings range of 140 to 180. So good news there.
Cool.
Their stock, buddy, it's up 14.33% this morning.
We need all the help we can get from good news issues because I gather it's not looking good for everybody else this morning. When we closed on Wednesday before the legal holiday for the morning day for President Carter, we had at least a mixed bag that was mostly green. I'm guessing 45 minutes before we trade this morning, you can't find much of anything that's green if it's not a bond yield, right?
No, I can't find any stock indexes green at all. The Dow is trading down right now between 8 and 9 tenths of a percent. That's $363. The S&P 500 is trading down almost 1%. That's $58. Nasdaq 100 down 1.1%, $243. The Russell 2000 down almost 1.9%. That's $42.40. If it opens there, it will be in correction territory, Dave. On the other side of the coin, we got silver popping a little over 1/10%. Gold's up a half. It crossed over 2,700 to $2,705. And then crude oil is heading to 80, Dave. It is on a fast track, up 4.1% today. $76.98 a barrel right now.
Good heavens! I read an article that was saying that there were projected increases in demand needs coming out of China, and that was pushing the world oil markets up. Given all the economic reports out of China, I don't understand it, but that's what they're blaming it on anyway. Overseas markets, it wasn't pretty at 6 a.m. this morning on the Asian Rim either. The mainland Chinese market's down 1.8 at 1.3%. That pretty much dragged everybody downhill. Over in Europe, we got a red day going as well. The UK markets are down by over a full percent halfway through their trading day and trending downward. The overall European index down a little over 0.5% right now, looking about halfway through their trading day. I'm not sure I'd want to be in equities heavily right now with my retirement fund. That means I got too much risk. How do I find you to get the risk out of mine?
Then give us a call, 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning. 10 a.m. Sunday morning on Hannah's News Talk, 7:30 a.m. and 95.3 FM.
And we got an update on Monday morning, same time right here on Light FM. Phillip, I will see you next week, and I appreciate it.
So, Dave, just a reminder, I'm out for a while, surgery next week, so I will be out for a couple weeks now, guys. So, y'all, I know Dave will hold it down, and I will get back as soon as I can in the chair.
We most certainly shall be be praying for you, my friend. Be well.
Thanks, Dave. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Do you actually read your financial statements, or do they get tossed?
Didn't know.